All right, we want to talk a little bit today about actually paying taxes. I know it's not what we like to think about, but it's the reality of what we do. When you're a W-2 earner, your company helps you pay those taxes. In fact, they kind of ensure you pay those taxes. Every week those dollars get taken out. But now that we're in business and now that we're running business, that isn't the way that it works. Nobody's taking dollars out every week, but we've still got to get the government the money that they're owed, and we need to pay those dollars.
Right.
As a business owner, talk to me a little bit about how I do that.
Okay, so we're kind of on this pay-as-you-go system, right? And most people, well, let's start with the W-2 person. So I get a W-2. The company I work for withholds money. They contribute it to the IRS in the state if you have a state tax on my behalf. In fact, I always like to kid that the IRS trusts us so much as our business partner in what we do that they make sure they get paid before we do, right? I mean, that's really the reason we have withholdings. But the company kind of takes that process away from you. So what happens when we go into business is we're not used to having to take care of that process for ourselves. And so the IRS and the states, they've come up with this quarterly tax system. They say at the end of each quarter, which isn't exactly a quarter, it's like the end of April, or April 15th, June 15th, September 15th, and January 15th, you can make an estimated payment based on the income that you've made up to that date. And there is a little bit of finesse that goes into that. We do look at, this is why it becomes so important to sit down with someone like me throughout the year, right? To see what may I owe, what's going to be best for me to pay. Do I foresee any expenses, large expenses coming down the pipeline to say, you know what, maybe hold a little bit more money back here because we know we're going to have all these expenses coming down the road. But it really becomes important to make those quarterly payments because the IRS goes so far as to look at what you made during the quarter, and if they think it wasn't enough, they start to give you penalties. And so we have to be aware that when we're in business for ourselves, quarterly payments become a really big issue.
If not, you're going to get hit.
You're going to get hit.
The government's going to take as much money as they can. Right?
In fact, the IRS last year collected somewhere in the neighborhood of $30 billion when it comes to these penalties and interest. And there's a couple key areas of penalties which they look at. One of those is quarterly payments, the timeliness of them, and how much you actually paid. Yeah, they do like to recalculate that.
So let's say I'm good and I'm paying my quarterly taxes, and it comes down to the end of the year, and for whatever reason, cash flow is tight. I know you've seen this with clients you've worked with, and maybe I have some billables that I expected to be in and they're not. Maybe it was a rough year. There's a lot of reasons, but I come to that end of the year, you do my taxes, and you tell me, okay, here's the payment you need to make, and I just don't have the funds.
Right.
What are my options now?
I mean, that happens. It's not as rare as you think. People have expenses in business. If you're, a retail organization, maybe you had to make a huge outlay in cash in order to bring in a lot of product, for example. So all my cash is tied up to product. I haven't sold through the inventory quite as quickly, which gives me this cash crunch, and now I owe a bunch of tax on the money that I made, but most of my money is sitting in inventory and I don't have it. Right? So there are some things you can do. For example, you can do 120 days to pay. So did you know that April 15th, you file your tax return, you don't have the money. You can call the IRS and say, listen, I need 120 days to pay. And they'll say, okay, we'll put you on that time clock. We're not going to send you any letters. You called us, that's great. We'll give you 120 days, and then you can make your payment that you owe on your tax return. The other thing you can do is installment agreements. And you can actually submit installment agreements right through with your tax return. And what that says is, listen, I don't have enough money right now, but I know that I owe you, so what I want to do is just come up with an agreement with you that I'll pay you a little bit each month to satisfy that obligation. And you can stretch it out as long as 72 months. Now, that's not going to be my suggestion because I always like getting the IRS off my back as quickly as possible, but that is available to you. And what you look at is what's available to you. What are my various options? But you can do that. It's a pretty simple process. It costs $120 roughly to set up. You can do it automatically, actually, where it's just taken out of your bank account each month.
But if I don't have the money or if I need that cash, it's a great option.
It's a great option. So I would suggest that you sit down if you're in that position, look at what are my options, how can I possibly make payments within 120 days, or do I need to go on an installment agreement? But what you don't want to do is simply submit your tax return and then ignore the IRS.
Well, and to that point, I think one of the things that helps you avoid that is being on top of those quarterlies.
Correct.
I remember my first year in business, and I hate to admit this to everybody, I was young, I was dumb, and I didn't do any quarterlies, and I got to the end of the year and I saw what I owed, and I thought, are you kidding me? There's no way. And you get on those quarterlies, you plan for it, all of a sudden it becomes much easier to manage. Now, one thing that I think is important as we have this conversation, just to bring up with you, is I've seen people, and hopefully this is none of you out there, but they think, hey, well, what I'm going to do is I'm going to just file an extension, and now all of a sudden I don't have to pay any money until the end of the year. But that's not exactly what an extension works, right?
No, it's
so
not.
Just give us some insight here.
So the insight is that an extension is only an extension to file your tax return. It is not an extension to pay.
Yeah.
So we need to make sure that we're making these quarterly payments. Last one is January 15th. You can make another one at your extension time, but extensions are not extensions to pay.
So at the end of the day, I've got to be on top of it. Otherwise, I'm going to incur penalties, interest. And again, as great as the IRS is, they're going to hit us with every penalty, every piece of interest that they can.
Every bit. They are the biggest collections company in the entire world.
Well, put a little bit of time in ahead of time. Make sure you're on top of things. If any of you, unfortunately, are in that spot where cash is tight right now, there are options that you have. You don't bury your head in the sand and pretend that it's just going to go away, because that never does us any good. There are a lot of options. Talk to a professional. Make sure that you keep the IRS off your back, because that's never fun, right?
Correct.
We know how important it is for you to keep your business running smoothly. Here at Tax Hive, we can help with all of your tax and business service needs so you can focus in on what it is that you do best. Our entire team of experts is standing by, ready to help out. Schedule a strategy session with one of our experts today.